Tech stops plummeting, crypto dissolving, layoffs on the rise. How will all of these things impact the local Bay Area real estate market? We're going to go over the news of the week, and I'm going to give you my thoughts as to what is likely to happen as the weeks and as the months progress through. Let's take a look of what has been going on and what are the activities. I mean, every week it just seems like so much bad news is occurring and unfolding. So what does this mean for yourself? What does it mean for the market? What can you potentially expect as we move forward? So let's talk about it, right? If you own tech growth stocks, if you own crypto, you have probably got decimated over the last couple of weeks. This week was probably some of the most brutal it has been. Even the large tech companies like Apple has dropped a decent amount. I know Google from its all-time highs has probably dropped about 20%. So those are very big swings for these massive trillion-dollar companies. So what is happening and why are these different things happening at this time? So a lot of it has to do with people's expectations of the future. It has a lot to do with trying to combat inflation, right? Inflation is still at a very high amount, and it's at a very high amount for a lot of reasons. Combination of supply constraints, combination of the war in Ukraine that continues to be playing out, combination of so much money that has been printed and accumulated over the last couple of years. And so there's a lot of factors that the Fed has to keep aggressively increasing interest rates to have a chance to try to slow down inflation. Now, there are signs that inflation is peaking, but until it actually declines, I think we're going to be going through this for some time. And so what does that mean? It means if inflation and because of the interest rates are a specific amount, that cascades down to the growth companies that will be impacted because their valuations had initially been very sky high. When interest rates rise, people have to make the decision, okay, do I want to then, does it make sense for me to go after these lofty goals and projects or startups that are unproven, or do we want to go towards a flight of quality? And so we see a lot of that happening right now, where it's a flight to quality that is happening. But even the flight to quality will take an impact as those that are these hyper growth, money losing machines are in trouble. So what does that mean, though? As you can see, a lot of those other companies are scaling back, especially startups. I know Peloton took a huge hit. But then again, they were losing a lot of money. You look at Coinbase, they got absolutely decimated. You have Robinhood, you have all these different companies that had taken quite a beating, and they are going to be laying off people. It's not going to be a surprise there. But what does that mean for big tech? What happens with big tech? Now, Meta has been interesting, right? Because Meta has still been earning a lot of money. They've been slow down their growth, but they're also making a huge bet towards their AR/VR group. So their AR/VR group has spent and lost a lot of money, a couple of $1 billion, even though they're still earning a lot. However, at the same time, they understand that they grew a lot in the first quarter. So they are freezing hirings. Now, we have not seen any signs yet, if there will be, of any layoffs, but there will not be any more hiring for a specific set of people within Meta. So that's something to be mindful of. You have the news of Twitter. So Twitter is interesting, right? Because that's the downside of Elon Musk buying the company. Twitter for a long time has not been doing very well. Take a look at their stock performance and you can see for yourself. However, they've been able to kind of coast around. So I've seen a lot of articles and it makes sense. If they're just kind of just pushing around, getting paid a lot, doesn't really care about earnings and things like that, then a lot of the employees actually have pretty good lives there. They were talking about all this flexibility and all this kind of stuff. And when Elon Musk made the move to buy it, the very first thing he said he was going to do is he's going to cut a lot of people because a lot of people were not needed to even be there. So a lot of execs got cut. A lot of employees are expected to be cut. I think he mentioned he wanted to cut about a couple of thousand employees, which is maybe 20%. He did say over time that he will help grow that to a couple more thousand employees more. But for now, he needs to trim a lot of that bloat, and so that it's a better run company. And if you know Elon Musk, he runs things very efficiently and he wants people to work hard. And so if you think about the Twitter atmosphere, I think the culture and the environment of employees there have been, quite frankly, pretty relaxed for a long time. But make no mistake, not anymore. And so there are cons when these kind of things happen. The way that you should think about this is like it's no different than a hostile takeover in these like big hedge funds that buy a company, trim the fat, make it lean, repurpose it, and then put it out. People forget that just because Elon Musk bought it meant that that wasn't what he was going to do. It was definitely what he wanted to do. And people better be aware. And I'm sure a lot of people are very nervous within Twitter. Now, the thing about this, though, is not every company, even where we're at right now and all the hits that have been, there are still several companies that are going to continue their aggressive growth. Take a look at Google. So Google is a huge bull of this. This was an interview, and I highly suggest you watch it on CNBC. This happened on May 12th. It was literally not long ago. So what were Google plans? Google initially made the plan earlier this year that they want to bring in another 12,000 people this year, right? That's a massive hiring speed. And he said this as recent as this week. While all these news you have been seeing or happening over the last 1 or 2 weeks, Google is going to use this as an opportunity to land grab talent. And that's the thing about what we have seen in the corporate real estate space and what we now will see with hiring for those that are doing well. So companies like Google, another company like Apple, I'm sure companies like Microsoft, they're all in the same boat. Their balance sheets are extremely strong. Yes, their top line may take a hit, but if they're continuing to grow as they were, and they need a lot more people, and they also have a lot more projects to take on. So this is a great opportunity where other people are laying off potentially talented people back to these companies. Now, I want people to also understand, where did a lot of these companies go? Like, where did these employees go? Where did a lot of execs actually lose talent to? Think about it. They didn't actually lose to too many startups, even though they have. The biggest culprit were crypto companies. Leave it in the comments below. Did you make a move to a crypto company because of the promise of the future? Do you know, how many people do you know, leave in the comments below, that work at a crypto company and got leered because of very high pay or potentially high bonuses? And so that was actually a lot of the brain drain was actually through the crypto markets or those companies. But now that those crypto companies have been decimated and they are just like a high growth tech stock company that are growing at all costs, this is an opportunity for them to Google for able to bring back and attract those people that they have actually lost over the last couple of years. And so they are using this as an opportunity while other people are fleeing and being very conservative. Google has clearly the balance sheet. If you look at their profits, record revenue, record growth, and they're still continuing to do it. And if they're the only ones hiring, make no mistake, they're going to get a lot of great people and talents. And Apple will be the same way. So don't be surprised there. And so what are the other things that are happening? So you saw the interest rates increase. So even mortgage rates have certainly increased. We will see a lot of layoffs happening, more primarily of those smaller hyper growth companies that were just burning money and didn't really have much of a product. So we're going to absolutely see that. But how does that actually impact real estate? To be fair, most of my clients that are buying real estate don't work for those types of companies, those super high growth companies. And why? I think the demographic and I think the mindset of those hyper growth companies, right or wrongfully so, they've been really bullish on tech, on day trading, on crypto, on potentially NFTs, right? Because if you think about this mindset, hear me out. If you think about that mindset, I have many clients that are like, why would I buy real estate? Real estate appreciates 8% a year on average over a long period. That is so slow. Did you know my crypto went up 100% in a month? Right? I get these things and people don't understand. There's always a risk to reward equation to it. right? If you trade stocks, even stocks have an alpha and a beta, right? So there are different thresholds of how people assess the risk and reward. Now, for a long time, because there's been so little downside for crypto, people were like, Dogecoin to the moon, right? These types of sayings, and just keep hodling. We'll hodl forever. Well, how many people are hodling now, or hodling, however you say it? And so that's the thing that now people will get wiped out. I mean, that's the downside, right? This is why you always keep a diversified portfolio, right? Talk to any financial advisor; they will tell you the same. Is yes, you may be more aggressive for one, but you shouldn't be all in on a stock. You shouldn't be all in on real estate. You shouldn't be all in on X. Very few people are all in on real estate. That's the fact. A lot of people, especially those that are those younger growth companies attracting a younger demographic, they tend to be more of not knowing and not having experienced any downside. And now a lot of their money has unfortunately been wiped out. You will see if it recovers. There's been a big bounce back on Friday, but who knows, right? Time will tell. Now, the question, though, is important for all of my listeners, what will happen to Bay Area home prices? All of those are obviously terrible news, and it is the reality. We are very likely already in recession. Let's not fluff anything here. We are in a recession already. Now, it's not been technically out yet. We still have to wait. If you saw from my last video, you have to wait for 2 quarters for it officially to be in a recession. But all signs are, how can we not be in a recession at the moment? So what does that mean for house prices? What will likely happen? The key for people right now is to think about, okay, one, what is your job situation? Are you really at risk at a layoff? Or is just things have gotten soft? And what are your fundamental goals to begin with? Right? Why were you even thinking of getting out of your situation? Was it too small of a space? Was it because you're renting, right? The thing of these recessions is actually when people are not able to afford to buy a house, they actually end up renting. So the rental market, if you have seen, has continued to increase and will likely increase even further. It's an interesting thing that happens in these situations because they cannot afford to buy a home. Never mind trying to keep their home. That's a different story. I don't think we're anywhere close to that point, but that's the idea. They won't be able to afford to buy a home, so they instead rent. That's why you see across the Bay Area, rent figures have certainly increased, especially versus last year. So what does that mean for home prices, right? And what does that mean for you as an individual? If you're not at a risk, which a lot of people, quite frankly, are not at risk of losing their job, especially as you can see with Google hiring another 12,000 employees this year alone and how they're doing, then you should continue to move forward with what were your goals? What were your objectives? Do you think fundamentally over a long period, those things have changed? Probably not. We do have a very massive national supply and demand problem, which is we don't build enough houses for the number of people that are able / want to live in a house. So those things have not changed. But the question is, for your timing perspective, is now the right time? If your alternative is rent, then you could argue it goes back to what I tell all of my clients. It really depends on the time frame. If you plan to be here for the next couple of years and rent is continuing to rise, it still fundamentally makes sense to still get into real estate and own it yourself instead of paying these, quite frankly, exorbitant amount. That's the true robbery, is renting. That's just insane of paying that amount. So understand that. Now, if you are obviously laid off, you can't buy a house. If you're suspecting you will be laid off, then don't buy. Wait and see what happens, right? That's a different matter. But for a lot of people, you're not in that situation. And what does that mean? It also means the benefit right now, so I could keep zooming in and out because I have a few things I want to share, is if you're not affected by that, then you should be very happy because at the end of the day, now this has been the easiest time in the last 2.5 years to buy a house because a lot of people are very fearful. A lot of people are very concerned. They have every right to be. However, for you on your own goals and your own timelines, what has changed? And so this presents a fantastic opportunity for those to be able to buy it with different potential contingencies now, to be able to buy at prices probably potentially lower than before, much less competition. You have all these factors that weren't there. And so that's That's why for me personally, in the last 30 days, I've helped 12 clients with their moves, which is the most I've ever helped in a 30-day period than ever, because my clients are educated. They also understand the real risk and reward, and understand, look, at the end of the day, I'm going to be here for a couple of years at the very least. It doesn't make sense to be renting and paying that amount. Rather get your own home, lock in the interest rate, and then go through that journey over the next couple of years. And I'm sure over the next couple of years, things will turn out fine. If they won't, to be fair, we're all in trouble anyways. So that's the thing when it comes to assets, right? If over a long period assets don't go well, the whole country is in big trouble. That's something important to think about, because keep in mind, if you're also sitting in cash, inflation is eating up your cash, right? So it's a very difficult situation for a lot of people. So at the end of the day, you have to kind of think about what are the long-term goals and what are the right moves to have. And so hence why you don't see actually any impacts yet on Bay Area home prices. You don't have to worry about this, because obviously this is comparing median home prices from a year ago. So obviously, if you compare a year ago versus now, especially when they start running these reports, it's going to look very, very favorable. But I will have to say that things in general will be easy. Things are the easiest that it has been and will be as we progress through the weeks and the months. The key is you being able to find your own home. So I have some other side news. Office vacancies hit new high in San Francisco Bay Area. So San Francisco continues to do very poorly when it comes to office space. I really hope there is some way and some opportunity for them to be able to convert their office space into condos. I don't know how many times this has ever happened, but imagine this. I mean, if you have 24% vacant space, I mean, that's a couple million square feet of unused office space. Now, obviously, you need the infrastructure. I don't know if they have the infrastructure, but it'll be really cool to see if there's any way that there's somehow that these can be converted. I don't know how. So if you're an architect or you are a structural engineer, leave in the comments below. Can you actually do this? Because I think that is the move to make, because it's not looking good at all for San Francisco. Now, for some other kind of fun news, I saw this recently. A startup is renting tiny Bay Area pods for $800 per month. I live like that on a warship, like a submarine. That's kind of is like a submarine, these pods. So there is a company that opened this up in Palo Alto of all places. Why did they do it in Palo Alto? Because Palo Alto is a very prime area, some of the most expensive rent figures in the entire country. So they're renting these little pods for $800 a month. What I find very funny and very humorous is that you don't have to do this. I mean, you could do this if you want, and there's an aspect of co-living. So I get that. There's fun in that. But you don't have to do this. What do you mean? What I mean, you can rent out a room in like San Jose, which is a little bit further, 25 minutes away. You can rent a whole room probably for $800, $900. But if you want to be in the prime area, this is a viable option, or really that co-living situation, very prime option. The other alternative is, why don't you just simply get a bunk bed and then rent out a room with one person? You can easily do that, and they'll probably be less than this, even in places like Palo Alto. So it's a cool concept. I don't think it's a housing crisis by any means, but I think it's a cool concept. You see co-living happening a lot, and so it's a cool. Let's just say it's a cool project, and that's why I want to share that. What do you think? If as an individual, for you to save money, and this is what I like about it, though, you are only paying $800 a month, so you're saving a good amount of money. Would you consider doing that? Whether it's in San Francisco, whether it's in Palo Alto, any of these places, would you consider doing that? And even if it wasn't for the cost, would you just do it from the co-living aspect? You being able to have roommates and people that you can gel with and connect with and party with, right? So I don't actually think it's too bad. I think there's this atmospheric co-living that has been very popular for many people that I know, and it could be a very viable thing. Also, one big change, I'm not going to now be doing the weekly market updates anymore on the price perspective. At this moment, week by week, I've been doing it for 2 years now. Things aren't changing that drastically week by week. And rather than doing that, I'll probably just do it at the last weekly update that I do of the month. And then we'll just go over that data together. But week by week, I'm going to actually remove that altogether. But leave it in the comments below. Should I be doing it every week? Or is once a month enough? Or should I just be doing a separate video on its own once a month? Leave it in the comments below. Let me know. Hope you enjoyed this video. I'll see you at the next one. Bye now.